Hey everyone, Chris from Stoic Bookkeeper here. On today's episode, I had the pleasure of meeting with Murong Feng, an emerging crypto CPA in the accounting profession, who is a former Tesla team member turned yogi, artist, and fintech product expert. Together, we explore the unique challenges and opportunities at the intersection of Web3 accounting and AI. If you have any questions after the show, please reach out by visiting stoicbookkeeper.com. I hope you enjoy the show. Hello, everyone. My name is Chris. I'm founder of Stoic Bookkeeper, and I have the pleasure of meeting with Murong Feng today, CPA, and we're going to share some insights about what Web3 recently funded companies should take into consideration with building out their technology stack. So, Murong, how are you doing today?
Doing well. Happy to be here. Thanks for having me, Chris.
Of course, excellent. So, yeah, I'd love to learn more about yourself, your experience, and your curiosity with regards to getting into the Web3 space.
Yeah, I got into the Web3 space through my friend Emily, who is a big player in the marketing space in crypto. And my background is in accounting and product management. So I am an accountant, but I also build softwares for accountant to help a business run. That's
Incredible,
the short
amazing.
version.
And I noticed you've been like sharing your story on X about like how you've been testing out different like Web3 protocols and products. Can you share some insights about that?
Yeah, it's interesting. I would say some platforms do it a lot better than others. There are some stuff that most things look like a scam, but when the platform does a good job, it does a really good job. And I do see potential on onboarding more people, but there is a huge barrier to onboard to
Right.
crypto in general, let alone to onboard these different platforms. For example, Warpcast is a great platform for creators as it rewards creators. But how are you going to get people? You have to get people to crypto first and then to be onboarded to Warpcast. And retention is another challenge.
Right, certainly.
Yeah.
Yeah, and it kind of begs the question, like, if you're launching a Web3 business, like, what chain are you going to build on? That way, you can actually someone tap into and build a community where not only is there a lot of liquidity, but also just a lot of people in general. And it sounds like you've been also testing out different types of on-chain video games too. I know that there's a trend of GameFi right now and has been for a while too.
I played Crypto the game. I think that's more of a social game.
Okay, cool.
In terms of gamify crypto, I didn't go further than the mini apps that's available in Warpcast. Those
Yeah.
are those are fun, but the UI is, to quote my husband, he's a software engineer in Web 2. Some of the UI in Web 3 for games look like Web 1. It's
Right.
like a college student's project, but that's probably what it is in essence. Like somebody coded it in half a day or a day and then put it out there to test things out. Yeah.
Right. Yeah, I was recently at the USC VanEck Digital Asset Conference. It happens once a year, and they had some various developers in the Web3 space that were speaking there, and some of them were building on I think it was the Sweet network. But I know in hindsight, like Avalanche tends to be a popular protocol, blockchain that various Web3 games are building on. And there's one company in particular called Shrapnel. It's a AAA game. Supposedly, a lot of the team members from Halo, they branched off, got into Web3, and the graphics are incredible. I know that there's a lot of like development with GameFi and like esports as well. So it'll be interesting to see how things go in terms of
Yeah.
it's an area where there's certainly like utility. You can build out your ecosystem. You can reward players for performance. It's pretty interesting in terms of like the development and also like the funding getting back into the space with like VCs creating incubators in these ecosystems to really prosper creativity and development. Which kind of like leads to my next question. Now, as a CPA and as a recent founder for a bookkeeping firm, I would love to kind of hear your thoughts in terms of what recently funded Web3 startups should really take into consideration when building out their CFO tech stack.
Their CFO tech stack, I would say ideally implement something just once instead of implement something and then offboard and onboard to something else. And startups in Web3, Web2, whatever, it's all the same story in the beginning, right? You don't have revenue, you have funding, you're trying to build foundation for later. And the goal is always to scale, to succeed and to scale. So, why there are so many companies that I worked for and clients that I worked on are like they start out with QuickBooks and then they have to transition into something bigger or even going to the extent of building something in-house because their landscape has changed. So if QuickBooks is the right answer now, then be prepared to like change the software later. Or if you can afford it, if you have enough people to manage the software, maybe onboard onto something that is a little bit bigger, that has different subscription plans that can handle growth.
Right.
Yeah. What are your thoughts?
Yeah, it's a really good question. Like the majority here in the States, a lot of companies choose QuickBooks. I've been hearing some firms, some businesses either recommend or onboard it into Xero. It seems like those are the top two. But there's also like new and emerging general ledgers as well, such as Puzzle. Like what's going on there? I got a meeting with them next week. Super interested in terms of maybe they're incorporating like AI automation as well. I know you sent over a link to Digits too.
Yeah.
So I think like you and I, and it seems like maybe that there's a trend here that a lot of like technology centric accounting firms, bookkeeping firms are certainly open to exploring new and emerging general ledger recommendations, as well as with like a subledger. That certainly shouldn't be overlooked with Web3 companies as they're receiving funding in digital assets, receiving revenue on chain as well. And it's so crucial for any business or any professional too in this space, even if you're doing this for fun. Like everyone, any business needs to have some type of methodology to understand how much digital assets are they acquiring, how much timestamp, what was the digital asset, what was the fair market value of the digital asset, which is the cost basis upon the time of receival, and then at least have a mechanism in place. That's one of the benefits of a subledger, to be able to, here in the States, with the recent ASU 2023-08 fair value accounting. And so you always want to reflect what your fair value accounting is on your finances. And it's great to work with experts in the field to be able to make those adjustments. If you're trying to cut back on costs, like at least have some type of software where you have visibility in terms of what those unrealized gains are. You can make those adjustments within the general ledger. And that's just, big picture accounting. And then I think that there's a lot of development in the space with regards to like AI automation. I love what Ramp is doing, for example. I'm sure like Brex and Bill.com, I think that there's a few others out there that are helping kind of like automate reconciliation, being able to auto categorize those expenses. There's some really cool tools out there to help make sure that we can detect variances. That's our job, but to make sure that books are clean, definitely leveraging upon technology. But getting back to what recently funded Web3 companies should take into consideration, like payroll, Gusto. Perhaps I got a meeting with Hello Franklin. What's going on there as well? Supposedly they're a little bit more crypto friendly. I think Toku is another one as well. They also manage like SAFT agreements. In terms of like certain reports outside of just maybe basic financial statements. I'd love to hear your thoughts on, like should a funded company, understand what their burn rate is, or maybe conduct a runway analysis. Any insights in that regard?
Yeah, that's super important, right? We know that only 1 out of 9 startups survive. That's a pretty scary statistics. And once you run out of funding, you have to go back to your investors and say, give me more funding. And they're going to ask why. Like, why didn't you last long enough to make money in the first place? So getting funding is only the start, the beginning. And your burn rate is going to be how much money you're burning per month. And that will give you an idea of, okay, I raised $25 million, but if I'm hiring all these like super fancy AI ML engineers and we're paying them $1 million a year in salary, you're having to take account into all the other stuff, right? Your payroll taxes, your benefits. And that's not a lot of time
Mhm.
for you to use the funding that you work so hard to raise.
Right.
So I think that's why so many companies are keeping things small, and even founders are taking like mostly equity as opposed to like cash compensation, just to keep things alive. And it's super hard work. And we see in San Francisco Bay Area that some startup founders get into weird deals that they end up in debt because they're starting to run short on funding. So to calculate your burn rate is gather all of your expenses. This is where your accounting or bookkeeping friend can come in, be helpful because they're seeing some expenses that you're not seeing. It goes beyond to just looking at your bank statement to see what happened last month because there are liabilities coming up later. There are liability that's coming up only twice a year, and that
Right.
needs to be taken into account. One
Yeah.
example I keep thinking about is if you own a home and you opt out of escrow, you're only paying your mortgage, your home insurance every month. But then November comes around, you're owing like $10,000 in property taxes. And
Yeah.
then February comes around, you owe another $10,000 in property taxes. That's $20,000 that you did not account for throughout the year. And now what are you gonna do? You're gonna
Right.
bleed. Yeah.
Yeah, it's essential to have that level of forecasting, a sense of prudence too,
Mhm.
preparation. And one thing that comes to mind is having specific accounts for specific purposes. I know that there's certain banks out there. Got a meeting with Mercury coming up. I'm sure you can do this hopefully with any bank, but have different types of accounts for, again, different purposes. Your basic checking account, having an account for savings, maybe an account for tax. That way you can just kind of financially prepare when you need to pay your taxes, or perhaps when you have a big outstanding account payable bill that needs to be taken care of as
Yeah.
well. That certainly shouldn't be overlooked. I know in Web3, at least from an accounting perspective, we're certainly advocating businesses to have proper like wallet hygiene. I think that's super
Mhm.
important. Certain wallets for certain purposes. You have, if you're involved in DeFi activity, perhaps a certain DeFi wallet for collecting that yield, entering and exiting specific DeFi
Yeah.
protocols. A certain wallet for accounts receivable, a certain wallet for accounts payable, maybe a cold storage for treasury, perhaps a certain wallet for payroll. There's certain ways to manage risk as well. You don't
Yeah.
want to have someone have access to your treasury, maybe a multi-sig Gnosis safe, for example. So pretty interesting insights in that regard, and certainly aligned, having a proper runway analysis conducted, ongoing burn rate, managing that, and just taking advantage of certain write-offs, maybe certain tax benefits. That's where we can certainly collaborate and make sure that we're helping businesses operate as efficiently as possible.
Yeah,
Um,
absolutely.
have you heard of the statement of digital assets before? It's not necessarily a required financial document, but I know that some publicly traded companies and various VCs and firms are starting to encourage Web3 companies to incorporate these type of insights.
Yeah, regulation is changing and it's getting less fragmented. I think it may not move as fast in the next couple of years, but it's coming regardless. A gap at one point was just a suggestion. Right now, it's a requirement. So the bigger the industry gets, the more people are buying in. And we already know more people are buying in because Bitcoin ETF is here. And it's just good to be prepared. It's better to have the data ready and not have the statement or have a choice to prep the statement than later when the requirement comes and we're scrambling. Just like when revenue recognition 606 came and there's so much work that you have to hire out like accounting professionals to get you ready.
Right.
Yeah.
Yeah. So with the regulatory environment, the first thing that comes to mind again is revenue purchase. I was going to say ASU 2023-08, which is the fair value accounting, which is quite wonderful in my opinion, being able to have visibility in terms of what those unrealized gains or losses are, fair value accounting. And there's revenue procedure 2024-08, which is basically when you dispose of a specific digital asset, you want to make sure that you actually dispose of the asset that's located within that certain wallet. Really important to keep track of your cost basis within those wallets.
Yeah.
And having processes in place to accurately determine what those realized gains or losses are. There's also this safe harbor position, safe harbor allocation that was allowed in terms of like transferring cost basis from certain wallets into others. What else? Also, there's been a lot of discussions about the benefits of perhaps launching a Web3 company in Wyoming. Have you heard of anything about that, Murong? I do have some details here. So there's an entity structure called the Wyoming DUNA, Decentralized Unincorporated Nonprofit Association, and supposedly effective back in July 1st, 2024, this act, Wyoming's DUNA Act, provides decentralized autonomous organization DAOs with a formal legal status as decentralized unincorporated nonprofit associations, DUNAs. This recognition allows DAOs to enter into contracts, hold assets, conduct business under their own name, and open bank accounts. That's
They would
essential.
qualify as a nonprofit
So
as a tax status,
yeah,
what
so
it sounds like.
I'm sure that there is a certain approval process as well, but it's important to just be up to date with ever-changing regulatory requirements and compliance. I think it's a good thing that Wyoming, as a state, is passing some type of legislation which can provide just a path for businesses to comply. Like the other year, there's all these Wells notices that we're sending out. Now it seems like there's some good regulation which businesses can comply with. There's also the recent repeal of SAB 121. Now there's SAB 122, which is providing enterprises to get back into the space. Supposedly, there's a lot of challenges with reflecting liabilities on their financials for assets that they're holding on in custody for their clients. So I think it's a really exciting time, and there's so many different use cases out there. Now, another trend. Oh yeah, I forgot to mention about the statement of digital assets. Basically, that's a statement where you've reflected in your financials the type of digital assets you have, the amount. I want to say some insights in terms of the purpose of those assets, perhaps think that there's a line item showing like where those assets are located in a specific wallet, like
Mhm.
this Bitcoin, we have X amount, and it's for long-term treasury. Also what the fair market value is, and also cost basis as well. So I'm sure that various stakeholders, when they're reviewing financials for Web3 business, they want to have that level of detail. Again, don't think it's
Yeah,
for gap, but still good information to have.
yeah, it's similar to the investment breakdown that we have for traditional finance holdings.
Right.
It's, I guess, my take on this whole thing of viewing cryptocurrency as assets. I think it's a primitive view. The people that are creating these regulations, they don't work in crypto. And at least what draw me into crypto is the philosophical aspect, decentralization, financial sovereignty, be self-custodian. And I don't know, I don't necessarily agree with what the regulations are saying. Like, this is an asset. It's like anything else that you're holding. Sure, but I don't know. I hope one day the people that are trying to regulate this industry would have a better understanding on what this is trying to do, rather than people just buying, like, trading the assets as if they are any type of like stock, bonds, commodity, because it's much more than that.
Yeah. Yeah,
Yeah.
it's really interesting to think about that because, like, from the ground up, in terms of compliance, it's our job to really understand our clients' use cases
Mm-hmm.
and be able to properly account for this activity in financials. That's great. We're getting back to the basics, being able to have a specific audit trail as well from the GL to the subledger to the blockchain. Yeah, kind of similar to like a bank feed reconciliation. It's just
Yeah.
like, all right, I'm going back to the bank statement. In this case, I'm going back to the blockchain, but certain blockchain explorers are still being developed. Is that data in there? Now, what's interesting is that um, I noticed that a lot of it, accounting professionals, it can be a difficult job to audit the various Web3 companies. And then there's the auditor of auditors as well with regards to the PCOB as well. So it's just like there's a learning curve all the way up. And one thing I noticed where there's success, there's passion. And I can tell that you're really passionate about this space. I'm super excited about the space as well. And it's like solving puzzles. It's great, to be able to reconcile books. And one thing that has been helping, I think myself, and perhaps you can say the same too, and other accounts can agree, is how AI is impacting the accounting profession.
Mm-hmm.
I'd love to kind of hear your thoughts in that regard.
I mean, it has to, right? And we hear AI has to be invited to the table. We keep hearing that there's a talent shortage. Like, most of the accounting professionals in the market are baby boomers, and they're going to exit out of the job market in the next 10 years. That's from the perspective of what an accountant does if the accountant is a baby boomer. 'Cause there's a lot of manual work, and in college, the professor keeps telling us like, "Oh, back in my day," but it's not back in your day anymore. This is not. There's no such thing as a junior accountant anymore. There's no accountant that's doing data entry of recording a transaction manually. That doesn't happen anymore. So the talent shortage is being closed by the newer generation inventing tools to help. Like, bank reconciliation, the first layer is the software automatically reconciles and highlights the variances, and then the accountant goes in to try to figure out what these variances are and what can we do to resolve them. So I think the next step is AI trying to have these preliminary findings and the education has to change, right? The person who graduates with an accounting degree in the next 5 years is not going to be like studying the same thing as I did. They're going to know how to review AI's work, and maybe the line between computer science and accounting is going to blur even more. So I think it's necessary to close the talent shortage because companies are not going anywhere. There's
Right.
still a need for accounting. And two, like nobody wants to do the groundwork that accountants did like back in the day or even now, right? Like reading through a contract, trying to see like where the guidelines would need to apply. So I think it's going to be a really powerful tool and help accountants to focus on more stimulating things.
Right.
Yeah.
Yeah, it's fascinating. One thing I've noticed with CPAs is that everyone has their niche, in terms of where their curiosity and their passion is. And I know that there's been, I think, some updates to the exam for the CPA now. There's some type of elective, I want to say, exam that you can actually choose based upon where you want to take your CPA.
Hmm.
In terms of where you want to bring your CPA in terms of that certain type of specialty, either tax or audit or accounting, um, generally speaking. And AI is certainly helping automate a lot of transactional input. The interesting thing about Web3 is there's still some hands-on manual adjustments, being able
Yeah.
to calculate that unrealized gain or loss at a specific period, get that data out of the subledger, immediately post as well. There's still and the interesting thing is there might be a lot of AI that is possibly impacting the space with detecting variances, certain red flags in the general ledger in really good tools like Xanet. I think Keeper's doing that as well, these practice management solutions, but it's not being carried over into the subledger. So with the subledger,
Hmm.
still kind of like, even with rules, automating transactions to the best you can, still want to make sure that, like, hey, I see this inbound transaction from a smart contract. This is going to be yield. I'm going to categorize that as a type of income. If I'm transferring assets from wallet into a DeFi protocol, am I able to understand the balance within that DeFi protocol, maintain that cost basis, and still reflect that on my financials without that transaction being disposed of? I want to actually hold, I'm working with it, CPA and, maybe even someone all the way at the Big Four that holds a specific stance, having those disclosures. AI in terms of research, I think it's quite helpful. I take it with a grain of salt. I think AI is impacting a few different industries, and like it can help. Like, hey, you know what? I'm going to do this research. It looks like I can actually qualify for some startup write-off expenses. Still want to get that signed off by a CPA. There's a lot of vendors are kind of leveraging upon these automation tools. Helps quicken the amount of time it takes towards reconciliation. Research is another area, and then also I think with FP&A. I know that data input into an AI application needs to be clean data. If it's clean data,
Yes.
you can do Claude will turn that into Python script, and then with Python you can put that into Google Colab and create some really cool charts to show cash flow trends and some interesting data to share with clients that can help with FP&A. But again, the data needs to be cleaned, and we're in the business of
Exactly.
reconciling and cleaning up that data. So still, I think there's still a lot of room for development
Yeah.
in the space. So, Murong, I really appreciate you sharing your insights. Excited to hear more, about what's next, and looking forward to partnering with you. Anything else that you'd like to cover during our?
Yeah, of course. It's always great chatting with you, Chris, and really glad we met, and let's keep the conversation going.
All right, let's go. All right, Ryan, thank you so much.